All right, I think you all have seen the recent article from the examining team, okay, on the exam technique for SBR. Okay, and specifically today, I would like to run through with you on the crowdfunding. So what happened here is, I'm not really going to spend a lot of time discussing the question because I think the question has already quite detailed answer is provided. Okay, now basically, you see, a lot of questions students pose to me is crowdfunding in the syllabus? Now, we are not talking about the crowdfunding, all right? So what is essential here is the application, okay, of your understanding of the accounting standards, okay, your knowledge of the accounting standards, applying the principle to a new situation. So basically, the situation that we are talking about, or the example quoted by the examining team, is crowdfunding. So because they notice that students are quite poor in applying your accounting knowledge. So and a lot of time students' question is, have we actually learned this before? Yes, you have learned. Okay, it's not learning about crowdfunding. It is learning about the accounting standards. So why you were not able, okay, to deal with questions related to crowdfunding? It's basically because you were not able to apply your knowledge. Your application part is poor. Okay, it has nothing to do with your accounting knowledge. So that's why the examining team come out with an article on this. All right, now let's run through this thing, a very quick one. Okay, let's have a look at crowdfunding. So the very first thing is what are we talking about when we say crowdfunding? So basically, it's a raising of funds from the general public, okay, for a certain purpose or objective. Now, there are quite a number of different types of crowdfunding available. So the very first one we have is equity-based crowdfunding. So an equity-based crowdfunding, basically the contributor will receive equity shares of the company in return for their contribution. Okay, then the next one we have is donation-based crowdfunding. Now when we talk about donation-based crowdfunding, now the contributor may or may not receive a reward for their contribution. Okay, now what if in the event the contributor does not receive any form of reward in return for their contribution? That means basically the contributor is actually contributing to the crowdfunding for a particular cause. Okay. Now, another type is debt-based crowdfunding. Now, in a debt-based crowdfunding, basically the contributor is contributing in return for debt holding of the entity. So it's also known as peer-to-peer lending. So it's basically the contributor providing a loan to the entity. Okay, and in return, they are expecting some form of interest. And the last one we have is reward-based crowdfunding. Now, generally, this type of crowdfunding basically invites people, okay, to participate, where you contribute to the fund, and in return, you'll be the first to receive the product at the offer price. So you are going to get a reward, okay, and this reward are usually the goods, okay, the product that you will receive in return for the amount that you have contributed. Okay, so it's like you are paying in advance of your purchases. Okay, so now the thing here is, don't expect SBR question to basically ask you what is crowdfunding. No, that is not. That is finance. You see? So SBR is all about the accounting treatment, how we deal with it within our financial statement. What would be the implication? So now your SBR examination is more than just a direct applications of your accounting standards. So because you see, ACCA wants their members, okay, the students, graduates, okay, to be able to apply, okay, your understanding of your accounting knowledge to different scenario, because that is when we are able to add value to the entity. Okay, so that's why you have to be prepared. Okay, you have to be prepared, all right, to deal with new scenario. Okay, that means things that you have not seen, situations or scenario that you have not come across in your textbook or your lecture notes. course. Now, today we have crowdfunding. So a lot of students will say, so will my September exam be crowdfunding? Now, put it like this, you say, if let's say your September exam is crowdfunding, then basically we are saying that this is no longer a new scenario because the article talks about crowdfunding, right? So you have to be alert that, what other possible scenario, okay? So what is essential from the article is to understand how the examiner deals, okay? The whole article is all about understanding how you apply, not understanding what is crowdfunding, okay? So don't study the wrong thing, getting wrong knowledge from the article. Okay, so now, it is all about new scenario. So basically, a crowdfunding is a new scenario. Okay, so now what happened here is actually, we have all the basic knowledge that we need. Okay, we have learned the IAS 32, IFRS 9, IFRS 15, which are all in some manner related to all these different forms of crowdfundings available. Okay, so now this is what happened. Okay, like for example, if we are talking about equity crowdfunding or debt crowdfunding, it's related to financing. So this is where your IAS 32, your IFRS 9 will come in. So it's looking at how the student apply their understanding of the accounting standards on these new situations, okay? So this is what your examiner in SBR look for, okay? So it's all about how much you understand from your existing accounting knowledge, okay? And how you want to apply them into new scenario, okay? So the classification. And then we have these reward-based crowdfunding. Okay, so that means you contribute, okay, and basically in return, once the product is finished, developed, and produced or manufactured, it will then be delivered to you. So it's more or less like, the contributor is actually the customer who pay in advance of his purchase. So it's all about, applying our IFRS 15. So this is the scenario given in your article. So I don't really want to waste too much time going through with you the article because the examiner has clearly shown how you deal with it, okay, by highlighting the relevant part of IFRS 15. So you see, when you read through the article, it is essential that, the part that the examiner mentioned about IFRS 15. So it's a question is, do you know or not? So if you don't know about those stuff that the examiner mentioned regarding IFRS 15, performance obligations, satisfied over time, satisfied at a point of time. If you don't know about that, that it shows that you have a weak understanding of the accounting knowledge. Now, but it's not enough. Okay, let's just say, okay, majority of you knows, okay, because your exam is just days away. So majority of you knows about the IFRS 15. But that is not enough, okay? The examining team is trying to tell you that is not enough to pass your SBR exam. You need to know how to apply in new situation, not expecting your September exam to be exactly IFRS 15 revenue recognition, because if it's the same, then good for you, all right. But please be prepared for new situations or even totally not crowdfunding. Okay, new context. All right, it's a possibility. Okay, so now when to recognize the revenue? So within the financial statement, so a lot of stuff like this. So you can see that from the given scenario, I think it's about a motorbike, a bike. Okay, and you have committed a certain number, you have raised certain amount. Okay, and your entity it may not be able to complete. Okay, subjective regarding the completions of the manufacturing. So different situations which are all addressed by your IFRS 15. So what is essential there is look at the answer, and how the examining team relates the answer to your IFRS 15. So that is what is essential. So this is expected from students who are taking their SBR exam. Okay, so stuff like this are all addressed by your IFRS 15. Okay, now what I'm going to do now, okay, I'm going to show you one, okay, because no point I go through with you an article, okay, that is already there in your exam. Okay, so maybe I have another possible scenario, you see. So, there's so many possible scenarios, right? So I cannot get into the mind of the examining team, but I'm trying to say it's all about learning the application, okay? So in a new scenario, you have to be prepared, okay, that the scenario is something new, okay, but you have the basic knowledge, okay? It's not about, your textbook don't have. You already got the knowledge. It's just the application of the knowledge to the new situation, yeah? So now, the company intend to restore a historical building into a museum for the benefits of the local community. So they need $500,000 to achieve the objective. The company has posted on AAA crowdfunding platform and managed to raise more than that. Okay, so the contributors are mainly made up of people from the local community who wanted to see a more historical buildings being restored. So, and they do not expect much in return. So now basically this is not a reward-based crowdfunding because they are not getting anything back in return. Okay, so they are actually contributing for a particular cause. Okay, so it's more of a donation in mind. Okay, so you want to see more old historical buildings are being nicely refurbished, restored, and being used, okay, for community benefits. So the company has stated that in the event, if the amount collected is more than the funds needed, so it will be used for operational purpose. So if you look carefully at this, so, in our mind is we have collected, okay? So this is how you have to break down the question, okay? So it's not about crowdfunding. It's about you have received the 600,000 now, okay? So people has contributed, okay? There are many people who have contributed this 600,000. So how are we going to deal with the 600,000? Okay, so assuming, put aside the cost of the crowdfunding, so we debit bank, okay? You're going to receive the money, so you're going to debit the bank, okay? But, what happened here is what would be the credit entry, okay? So how are we going to deal with this, okay? So they need to achieve, okay, 500,000. So that means 500,000 will be used, okay, to achieve the objective of restoring the building. Oh, so that means that money that you receive, that you goes into your bank, okay, 500,000 has to be used for restoration of the building into a museum. So now, think about restoring a building, an old building, to be used as a museum. So, what are the possible IASs or IFRS that could be applied in this situation, okay? And then think about, if you have deal with the 500,000, okay, then what about the excess of 100,000? So the key word here is any amount in excess will be used for the operational purpose of the museum, okay? So that goes back to when can we recognize it, all right? So that is how we have to deal with this in a new situation. So all of us, in this September, we go to the exam hall when facing the SBR question. You already have the basic knowledge. Don't panic, okay? What you have to remember is you got the basic knowledge already. You see, from my mind map, I'm very sure you got the basic knowledge. So what you lack in is how you apply to the different situation. So like, for example, just now, when we talk about, turning the historical, okay, museum, all right, turning the historical building into a museum. So I believe, IAS 16 will be applicable in this case, all right? So it's all about the cost of PPE, okay? And what about the amount received in excess? So what would be the treatment? So the keyword is the operational expenses. So in other words, when can we recognize the 100,000 as income within the profit and loss of the entity? When can we show as income? Immediately when we get it, or once the museum start operational. So these are things that you have to discuss, all right, in your exam, okay? So that's how, you will be tested in your SBR exam, okay? And I have another scenario, which is scenario 2, which basically relates to your equity and debt based crowdfunding. All right, so I will distribute that within our revision class. All right, so hopefully this video helps to clarify the expectation. It's more of the exam technique, the expectation. All right, so some students say, could this be a possible topic? I wouldn't say no, okay, but don't just put all your eggs into one basket. All right, so just be very careful that the message the examining team is trying to deliver in this article. All right, so see you in the next video.